Hi guys, welcome to another. This video is the interview question. This is the part three of this is the part. Let's start with let me give a brief. Like, let's start with the first statement. The very favorite question. So, how do the three statement link together? Income statement, balance sheet, and how these three are. So let's make a theoretical answer. Tie a statement together. Net income from the income statement flow into the shareholders. So there's a profit and loss account. Uh, no, there's a profit and loss account that net profit. So we will we will basically transfer the profit from the statement shareholder and to the top line of the cash flow as that is net income. You can see that the net profit and after that then there's the changes to the balance sheet item as a capital operating segment cash the investing and finance that the balance because invest yes or when we are investing and the invest sorry financing activity and borrow the money borrow debt shareholders. Apart from the cash and shareholder items balance, uh, the cash flow final line is after that. After that, all these other rating finance. There's a net change in cash and cash. After that, we will add the opening balance, closing uh, cash. After. Next question format, like very favorite. If I stand it as a we had, I wanted to review the overall health statement. Would I use? I would use the cash flow statement because it gives a true picture of how much cash company and independent of and cash. Uh, Basically, that's the number one thing you care about that analyzing the financial. Like a cash flow statement gives you overview about full cash transaction. Like there's a no liability. That you have to figure out the cash like what is the borrowing amount, what is going, what is coming. This is something like so you are making the next one. Let's say I could only look at the two statements. That's at the company perspective. Which two would I use? So in that case, you would let's say we have only two statements. We can use the income statement and balance sheet in that because we can create the cash flow from the balance sheet for the from both of the statements. Like we'll take the items like P&L or the depreciation L statement. Apart from all the items related to the assets and liabilities from the balance sheet. So that's of course one thing. Next one is walk me through how the depreciation is going up by 10 would affect the state. Like if there's an increase in the depreciation $10, how will we this increase the income statement, balance sheet, and cash flow? How it affects. Uh, so let's say that we have the P&L and we increase the depreciation by 10. Then in that case, like our expense decrease by 10, profit go down. So this is one thing. Apart from that, there's a recording the cash flow as well. We'll add the additional $10 in cash in the depreciation. So income statement, operating income declined by 10. Assume that we can assume as a 40% as the interest tax rate as well. Net income go down by 6%. Sorry, $6. And cash flow statement, net income top down by 6, but the depreciation 10 is a non-cash expense that get added back. So the overall cash from operation goes up by. So our net income is goes by the 6, but the depreciation is increased by 10. So overall effect is 6. Overall effect is 4. Goes up by 4. There are no chances elsewhere. Like net change in the cash go up by 4. Net change in the cash go up by 4%. Sorry, for $4. Balance sheet. Plant, property, and equipment goes down by 10. The asset side because of the depreciation, and the cash is up by 4 from the changes in cash flow. So this is one. Overall assets down by 6, and the income fell by 6 as well. And the shareholders' equity on the liability and the shareholders' equity side is down by 6. Both side of the balance sheet, uh, and the both side of the balance sheet balance. Like overall, the asset is down by 6, and the net income fell by 6 as well. Shareholders on the equity, shareholders' equity on the liability and shareholders' equity side is down by 6, and the both side of the balance sheet will. Like in this type of the questions, we always recommend like give by this order. First, we will analyze the effect on income statement, then we'll analyze the effect on cash statement, then we'll analyze the effect on balance sheet. This is so you can check yourself at the end and make sure that the balance sheet balances are common. Remember that the assets going up or decrease your cash flow, whereas the liability going up, decrease your cash flow. That's you always have to make the things of that. So next one is the depreciation is a non-cash expense. Why does it affect the cash? Although depreciation is a non-cash expense, it is a tax deductible. But the taxes are the cash expense. Depreciation affect the cash by reducing the amount. Like depreciation affect your overall income then deducted from the income statement. So that's why you have to pay the less, because let's say your income is 100 and you're paying the tax at the rate of 25%, 25 rupees. You have the depreciation of 40 rupees and you're paying the 25% tax. So the overall tax will be 15 only. So this is the effect of depreciation. So this is all for this video. Actually, we don't want to make this video as a too hectic. So that's why we are covering a little bit. If you like that, subscribe our channel.